What's up everyone, it's Caddy with MoneyVest. So in today's video, we are going to be talking about Shopify. A lot of you have been asking questions on this company and what exactly happened after it obviously dropped over 18 to 19% for a record drop in the company's stock price, now trading at extremely more reasonable, I would say, more attractive levels in the mid 60s, and the high point more recently was back in February at well over $90 a share. So it is down about 30% from its recent highs, and of course, not to mention well over 64% down from its all-time highs of well over $178 per share. So we're going to cover Shopify in this video. Just strap in, take a seat back, get some coffee, tea, whatever you want, and we're going to break down every single metric, all the numbers, fundamental analysis, and of course break down the intrinsic value on this company as well. So again, hope you all enjoy this video, find it helpful. Make sure that you drop a like and subscribe to the channel, and also do check out the Discord and the Patreon links down below, and also do connect with me on Instagram. And all the individual courses, fundamentals, technicals, options, and psychology, are currently 50% off with the coupon code May50 if you want to take advantage of that as well. So first things first, let's just go over to what really happened. Shopify stock slumps to record drop as revenue outlook weakens. So revenue outlook was a little bit sort of lower than expectations, but I think overall the numbers were actually pretty good. There was one of the big reasons why Shopify sold off is because it swung to a loss. It was actually a profitable company. From last year, it actually generated a profit of about 5 cents per share. But this quarterly earnings, first quarter 24, they reported a loss of $273 million or 21 cents per share because of their investments, because of the equity investments in a firm, and of course generating an equity loss into the company. So Shopify's core business remains strong and its moat is well intact, but questions surrounding its profitability trajectory and its high growth status present a new challenge that they must navigate. This was Miner, one of the analysts here, and on an adjusted basis, which strips out the exceptional and one-off items, earnings came to about 20 cents per share, beating analyst expectations of 17 cents per share for the company as well. So just a quick snapshot. As we know, the Shopify is an e-commerce platform that allows businesses, merchants, entrepreneurs to set up websites, set up their online stores, and start selling pretty much to the entire world. They've got a subscription basis, and then of course a GMV, gross merchandise volume basis, revenue drivers. And the subscription model obviously is merchants have to pay every month to use their tools and whatever Shopify has to offer. And then, of course, based on the GMV, they take a small percentage if they're using Shop Pay and other tools that Shopify offers. So in the first quarter 2024, revenue came in at just under $2 billion. That was up 23%. With global commerce since Shopify's inception came in at around $947 billion for the company as well. So if you take a look, this right here was the number, over 10% US e-commerce market share. That was a penetration from Shopify, and of course millions of merchants in over 175 countries is where they belong to, with 675 million unique online shoppers is what they host on their platform. Now, if you move forward to the investment thesis, so they mentioned that they help accelerate the power of entrepreneurship and merchant success, building a platform for entrepreneurship. Of course, they somewhat compete with Amazon as well, because Amazon also does host a lot of these tools, a lot of platforms that allow sellers to create a website, create the online store, and start selling to a significant audience. And e-commerce in general is a large and growing market, and as a result, you'll notice that it is also very competitive, right? So Shopify is not the only player that is part of this entire ecosystem. Amazon, being one of the biggest players, is the biggest sort of competition that Shopify actually has. We continue to expand Shopify's breadth to make it even easier for merchants to start a business. So again, they've got a lot of applications, cross-border transactions, shipping, back office, accounting, order management, and marketing and analytics as well. And this right here is the merchant focus through product innovation. So a lot of different services and just a variety of tools offered by Shopify, including artificial intelligence. So this is the flywheel. More merchants equals more merchant gross merchandise volume, because as there's more companies selling, more entrepreneurs, more businesses selling on the platform, that means more sales and more volume. That means more economies of scale. That means more products and more solutions. That at the end of the day means more revenue and means more profit and bottom line as well. This right here is also starting a business has never been easier on Shopify. They've got starter plans starting at $5 a month, ranging all the way from $5 a month to as much as $2,300 per month, plus enterprise programs and plans for much bigger corporations and companies as well. And this right here, unlocking opportunities that are only possible on Shopify. So they've got Shop Pay, 50% of conversions, higher conversions if businesses are using ShopPay, and 150 million plus buyers opted into ShopPay with $141 billion in cumulative GMV. That's your gross merchandise volume, and 14 billion in GMV in the first quarter of 2024 as well. So that was 56% higher compared to same time last year. So again, large and growing market, $849 billion is their total addressable market here. And then we've got $404 billion of revenue, serviceable addressable market. And this right here is going to be their actual drivers for business. Just under $236 billion in 2023 was the GMV. That's a gross merchandise volume, and that's up from $197 billion in 2022 and $175 billion in 2021. And this right here was the, again, merchant solutions for subscriptions, and of course for merchant solutions as well. As a whole, $7.1 billion in revenue in 2023, up 26% on a year-over-year basis, up from $5.6 billion same time last year. So Shopify payments, $137 billion in 2023. GPV, that's a gross payments volume, which is also another metric that PayPal uses and some of the other payment platforms. They use TPV, total payment volume, or gross payment volume. It's more or less the same thing. And this right here is the monthly recurring revenue. So the switching cost is actually really high for a lot of these businesses, because if they've already hosted their company on Shopify, and they're kind of comfortable with that, and Shopify, of course, offering a lot of these tools, they're able to generate that subscription revenue, which is very, very sticky business model. And we like sticky business models because of the higher switching costs. Adobe is a prime example of a company that has a very sticky business model, because even if I'm using Adobe services, Photoshop, Illustrator, Premiere Pro, whatever it is, I'm not going to be switching over to something else, because it's going to take a lot of time and effort to retrain with the new software, new tools. Same thing applies with Shopify as well. This right here, subscription solutions revenue continues to increase year over year. So $511 million, that's standard Shopify Plus and apps and themes and domains, everything included. And now we get down to the nitty gritty of the financial statements of the company. And you'll notice the revenue was actually up on a year-over-year basis. So both line items, subscription and merchant, as I mentioned earlier, they were up on a year-over-year basis, so $1.8 billion. Gross profit, $957 million versus $717. That was up on a year-over-year basis as well. That's very strong. Now, gross operating expenses, if you take a look at operating expenses here, they were actually only up. They were actually down. So that's actually quite a good thing, because operating expenses went down while revenue went up. So that is actually a very, very strong signal that the company is dealing with very good economies of scale, and they're able to achieve high levels of revenue growth while keeping operating expenses intact or even going down. But of course, R&D was one of the reasons why it went down significantly from $458 million to $335 million because of the fulfillment business shutting down for Shopify. And the income from operations, $86 million, swinging to a profit from $193 million loss last year. But of course, the net income, which is the bottom line, was a net loss for the company at $273 million. That was because of the fluctuations from the equity investment in Firm. That's why they had this over here. Other expenses right over here, this line item is $342 million, right? So that's the loss that they took, or unrealized paper loss that they have to mention this in under their GAAP earnings. Shares outstanding were actually pretty stable, less than 1% increase on a year-over-year basis. So, at the surface, it actually looks pretty solid in my opinion. And if you come over to the balance sheet, you're looking at cash and marketable securities sitting at well over $5.1 billion if you combine those two numbers. And their total liabilities are going to be sitting at around 1.3. So $1.3 billion is going to be their total liabilities. Long-term liabilities are going to be 1.3, I believe. And actually the current liabilities are $902 million. So about $2.1 billion, which again, the company's got more cash and marketable securities, well more than their total liabilities for the business. So again, balance sheet wise, this is absolutely fantastic. And again, this is the adjustment from GAAP to non-GAAP earnings. And non-GAAP, we were actually looking at 20 cents per share. And on a non-GAAP basis, the expectations are 99 cents per share for this year for Shopify. So that's going to be the earnings expectations. That's about 35% growth expected for the company, which brings Shopify's actual price earnings multiple on a forward basis on a non-GAAP basis at 63 right now. So if we do some math here ourselves, 99 cents is going to be around, if you take the share count and if you just multiply these two numbers, we're looking at a non-GAAP earnings, non-GAAP bottom line of about $1.25 billion. So if you plug in that number, right, $1.25 billion in net income for Shopify for this year in 2024, that's on a non-GAAP basis. And if you grow them by about, let's say 30%, right, 30% growth rate, and then we apply a 30 times PE multiple, 12% discount rate, 10% margin of safety, and let's just, apply a 1% share dilution, we're looking at a $52 to $53 in intrinsic value for the company. And right now it's at $62 per share. It's actually not that far off from its actual fair value, from its intrinsic value. And this right here is the sensitivity grid. And you can take a look depending on different growth rates and different, P multiples. You can get a good sense and good idea on where that intrinsic value would sit for Shopify. I would be a lot more comfortable, a little bit under 30 because I do think that over the long term, I think the growth rate's going to stabilize. It's going to come down closer to 20 to 24% over the long term in terms of earnings growth. And the P multiple that I would be comfortable paying with a conservative margin of safety here would be closer to 24, 25 as well. So I'd be looking at anything that's under $50 as far more attractive and appealing for Shopify. But this right here would be the sensitivity grid for the company. And again, let me know in the comment section down below, what do you think about Shopify and their business model and the earnings. I do think that this was a bit of an overreaction because they did beat on both EPS and revenue, even though swinging to a loss because of that equity loss here because of the investment they made. So I do believe this was a bit of an overreaction from the market. But support level is going to stay put roughly at $54 and a much stronger support here in the 40s. I mean, this right here would ideally be one of the best buying opportunities for Shopify, in my opinion. Technically speaking and fundamentally speaking, it would be a lot better in terms of valuations and, of course, pricing wise, based on the growth potential this company has. Balance sheet is strong, the growth is still there, the moat is intact, and pricing power is also pretty strong with high switching cost and very, very sticky business model for the company with very good high margins as well. They just need to, of course, achieve profitability on a more consistent basis because they have been a little bit more back and forth here and uncertain with respect to profitability. So let me know your thoughts down in the comment section below, and what do you think about Shopify? Support level is going to stay put down to $54 to as low as $41 per share. And as always, make sure that you drop a like, subscribe to the channel. Let me know your thoughts down in the comment section below. Happy investing, and I'll see you all in the next video.